Welcome to the deep dive. Today we are taking a serious plunge, looking at a powerful set of ideas for building wealth in the modern world. Our source material is pretty fascinating. It comes directly from excerpts of the transcript of Michael Saylor's keynote speech, 21 Ways to Wealth, delivered at Bitcoin 2025.
That's right. And what's striking immediately is how he framed this talk. He wasn't speaking just to governments or massive institutions, not at all. He said his message was for the 8 billion people on the planet. It's designed to be applicable to everyone.
And that's exactly our mission for this deep dive. We're going to unpack these 21 points, break them down into plain English, pull out the really surprising insights, maybe, and connect the dots on how they form a complete picture. Most importantly, we'll look at how these ideas centered around Bitcoin, AI, and smart structures might apply directly to your life, whether you're listening as an individual, thinking about your family, or running a small business.
Right. It all starts, as he puts it, with the foundation, your mindset and, your initial action. The very first way to wealth, according to Saylor, is clarity.
Clarity. Okay, clarity about what specifically?
Clarity about what Bitcoin is, fundamentally. He describes it using really strong language. Capital perfected, programmable capital, incorruptible capital. He argues that because it possesses these unique qualities, the demand for it is inherently massive and universal. Everyone, he says, the smart players, the opponents, even future AIs will ultimately gravitate towards something with these attributes. This clarity leads into the belief that its ultimate value is something profound, using the phrase half of everything.
Wow. Okay, so understanding its fundamental nature, that leads to the second way, conviction.
Exactly. Yeah. If you truly grasp what Bitcoin is, you develop the conviction that it's, quote, engineered to outperform every other traditional asset class you might consider. Things like stocks, the S&P, gold, real estate, collectibles, all of it. He sees its design as fundamentally superior for long-term value appreciation.
But having clarity and conviction isn't enough.
Right.
You need the third way, courage. And this is where he brings in that powerful metaphor.
He does. It's quite vivid. He paints this picture. Satoshi Nakamoto, the creator of Bitcoin, started a fire in cyberspace. Now, people react to this fire in different ways. The fearful, they just run away completely, never engage, and so they never benefit. The fools, they try to juggle the fire, right?
Yeah.
Using it to create fleeting distractions like minor projects, altcoins, or short-term speculation, what he calls trinkets, magic tricks, and fireworks.
Yeah.
But the faithful, the ones who will actually build wealth, they feed the flame.
Feeding the flame, that's the courage part. So it means taking action, specifically buying Bitcoin.
Precisely, yeah. Feeding the flame means converting your less ideal forms of capital into Bitcoin. That's trading fiat currency for Bitcoin, maybe selling long-term but underperforming assets like bonds or certain equities for Bitcoin, even divesting from less productive real estate to buy Bitcoin. He frames this act of acquiring Bitcoin as buying your ticket to prosperity. It's the essential step, really, driven by that clarity and conviction you've built.
Okay, so the personal foundation is set. Understand Bitcoin, believe in its future, and have the courage to acquire it. But Saylor argues you can't achieve truly significant wealth in isolation. He moves on to leveraging structures and tools. Way 4 is cooperation.
Mm-hmm. This highlights the idea that you are inherently more powerful, more effective when you have your family support and alignment. He introduces a really powerful generational strategy here. Transfer capital from older family members who might have assets in IRAs or traditional portfolios to younger ones. The younger generation typically has a longer time horizon, which is absolutely critical for maximizing the potential growth of Bitcoin over decades. Aligning the family's resources and goals, it supercharges the journey.
Okay, family is a team. Makes sense. Building on your own capabilities then. Way 5 is capability, and this one is very specific to the current era, he says, 2025.
He states unequivocally that mastering artificial intelligence is key right now. This is a massive shift. Before, getting sophisticated advice from top accountants, lawyers, professors, historians, essentially the collective wisdom of great entrepreneurs and advisors, was incredibly expensive, just out of reach for most. It was only accessible to huge corporations or the, ultra wealthy.
But AI changes that completely. Is that the idea?
That's the critical insight here. Yeah. AI effectively makes that same level of sophisticated insight and strategic planning capability available to everyone, almost for free. He gives a pretty clear method for using it. You go to the AI, Feed it your specific circumstances, ask it challenging questions, engage with its responses, even argue with it a bit to refine the solution, get it to maybe a 95% solution.
Yeah.
Then you take that highly developed plan to your human experts, your actual lawyers, advisors, maybe even your executive team if you have one, and give them a tight deadline, maybe 2 to 5 days, to turn that AI output into a concrete execution plan.
Wow. And if they can't work that way, or won't?
He's blunt about it. Replace them. He argues this requires humility, putting your financial interests and the pursuit of truth ahead of your ego. You have to be willing to ask the AI for help. But by doing this, he says, you overcome the massive cost barrier that existed just a decade ago. It sort of democratizes sophisticated wealth planning.
That really does sound like it levels the playing field. Okay, so using that newfound capability, way 6 is composition.
This is about structuring your affairs correctly using legal entities, your corporate container, or legal wrapper, as he puts it. This is how you scale your strategy, protect your assets, and access advanced financial tools. He mentions examples like leveraging 401k loans, using IRAs, insurance policies, even advanced instruments like dynasty trusts in favorable states.
But he emphasizes there's no single right answer here, does he? It's not one size fits all?
Absolutely not. This must be customized. The specific composition depends entirely on your jurisdiction. Are you in the UAE, Singapore, North Dakota, Florida? Where are you? And on your unique personal and family circumstances. But the point is, again, you ask the AI. You use that capability to get a tailored answer. He contrasts working hard, trying to figure all this complex legal stuff out yourself, with working smart by leveraging AI. He says asking the AI lets you go 100 times as far. It means you can now potentially structure your wealth plan with the same sophistication as a, quote, mega billionaire family.
Okay, structure in place. That leads logically to way 7,
Yeah.
citizenship.
This is about choosing your economic nexus, where you domicile yourself, your family, or your corporate structure. You want to be where the sovereignty respects your freedom, particularly when it comes to holding and investing in Bitcoin. This is a crucial long-term decision, he stresses.
And how do you make that decision? What's the process?
Again, he points back to the AI. Ask it to rank the best states in the U.S., like Wyoming or Florida were mentioned, or even countries, based on your specific intent for holding Bitcoin and your personal circumstances. He emphasizes this is a deep decision, not just for this year, but a fundamental choice for the next century for you and your family.
Way 8 is civility. This feels like a different kind of point among the financial and structural ones we've discussed.
It is, but it's important strategically. It's about respecting the natural power structures in the world around you. He uses an analogy here. If you're on safari, you don't try to wrestle the lions, you don't try to outsmart the elephants, you respect gravity when you're hiking. Common sense, right? Applying that to the Bitcoin universe, he's saying you don't need to expend energy trying to fundamentally change deeply entrenched systems, governments, religious beliefs, cultural norms, unless that's your specific, focused mission.
So choose your battles carefully. Don't fight everything.
Precisely, yeah. He suggests the world probably only cares deeply about your opinion on maybe 1 out of 100 things you might want to opine on. Instead of scattering your energy trying to fight every system you disagree with, or getting drawn into inflammation and distraction, focus on finding common ground where possible and conserving your energy for the core mission of building wealth through Bitcoin. Don't let fighting perceived enemies dissipate your focus and slow your progress.
Conserving energy for the main goal makes a lot of sense. Okay, way 9, perhaps the most central structure he talks about, is corporation.
He calls a well-structured corporation the single most powerful wealth creation engine ever conceived. It's a strong claim. He lays out a hierarchy, from an individual at the bottom, moving up through family, partnerships, private companies, all the way to the apex. The well-known seasoned issuer, WKSI, in U.S. capital markets, capable of filing massive financings almost instantly. The implicit goal is to climb this pyramid of structural power.
And why is a company so much more powerful than just operating as an individual? What are the key differences?
Oh, the advantages are vast. A company has special access to banking and capital markets. It has legal immunities an individual doesn't. It has potentially perpetual duration. It can outlive any individual. Significant tax efficiencies are often available only to corporations. They have greater creditworthiness, which is key for raising debt. But perhaps most powerfully, a company can sell equity religions, bring in partners by selling shares, and it can finance its future growth today by projecting its value decades out and pulling that economic energy back into the present. An individual simply cannot do that.
He used that really vivid example of the dentist, right, to illustrate this.
Yes, it's a great illustration. Imagine a dentist making, say, $200,000 in cash flow per year. As an individual, they could just buy 200,000 Bitcoin every year for 20 years. That's pretty linear growth. But by incorporating, they can get a valuation on their practice maybe 5 times cash flow, valuing it at $1 million. Now, as a company, they can sell, say, 33% of the equity for $500,000 today. They take that half a million, invest it immediately into Bitcoin. As the Bitcoin asset on the company balance sheet grows, the company's net asset value increases. This allows them to raise more capital later at higher valuations, maybe double the market cap, reaching 2/3 times the net asset value, accelerating their capital acquisition drastically. He suggests this is the path to becoming the first billionaire dentist, not by doing more root canals, but by using the corporate structure to accelerate Bitcoin capitalization through partnering and financing. Even a company of one, or family acting as a company, is fundamentally more powerful than an individual just acting alone. And of course, he stresses, ask the AI how to create the right corporate structure for your situation.
Okay, so we have the mindset foundation, the core action of buying Bitcoin, and the structures like family and corporations. Now, how about execution? Way 10 is focus.
This point is pretty blunt and critical. Just because you could do something doesn't mean it's the smart path to wealth. He draws a very sharp contrast between the probability of success for operational businesses versus simply holding Bitcoin on a balance sheet. He estimates a 90% chance of an operational business failing over 5 years and 99% over 30, 40 years. Really high failure rates. Compare that, in his view, to Bitcoin. A 90% chance of success over 5 years and 99% over 30, 40 years.
That's an incredibly stark difference in perceived risk and probability.
It is. And he uses this to argue that a property company, for example, that just holds Bitcoin could potentially see 30–60% annual returns doing virtually nothing operationally, while most operational businesses struggle immensely to achieve even 30% growth per year. A feat, he notes, accomplished by only a tiny fraction like the Magnificent Seven out of hundreds of millions of attempts globally. The core insight here is, don't confuse activity or ambition with the actual likelihood of wealth accomplishment. He believes the higher probability path is focusing on the strategy that works Bitcoin capitalization and avoiding distractions.
Building on that corporate structure idea, Way 11 revisits equity. Seems important.
Yes, it's so important he circles back to it. This is the power of sharing opportunity with investors who are willing to share the risk of the venture. An individual can't sell pieces of themselves to raise capital, but a company can sell equity, sell shares. He points to MicroStrategy and Metaplanet as prime examples of companies that used issuing equity to dramatically accelerate their ability to acquire large amounts of Bitcoin upfront, rather than just slowly accumulating from operational cash flow over years.
And Way 12 revisits credit, attracting capital from a different kind of investor profile.
Exactly. This is attracting capital from those who are less risk tolerant. People seeking certainty and yield, like maybe retirees or institutional funds with specific mandates. A corporation can offer these investors certainty by issuing debt or preferred stock that offers a fixed coupon, an interest payment, or a dividend, and often has seniority in the capital structure, meaning they get paid back before equity holders if things go wrong. In exchange for giving them that lower risk certainty, you gain access to their capital. They might earn a modest 4 or 5%, like on U.S. investment grade bonds, perhaps, but you take that capital and invest it in Bitcoin, which has historically compounded much faster. Say 30–60% ARR was mentioned as a possibility. The spread between what you pay for the capital and what you earn with it, Saylor mentions even a worst case 22% spread, allows you to accelerate your wealth creation dramatically. You're bringing potentially 100 times more capital into your strategy now through financing instead of just reinvesting slow cash flow over 20 years. He emphasizes financing as a key advantage of the corporate structure.
Okay, Way 13 is compliance. This sounds a bit bureaucratic, maybe dry, but he frames it as a source of power.
It absolutely is, from his perspective. It's about understanding and operating within the rules of your market and leveraging the specific powers granted to different types of legal entities. Public companies, trusts, insurance companies, broker-dealers, banks, they each have unique rights and advantages in capital markets. He points out a bank can leverage capital maybe 20-to-1, effectively printing fiat, in a sense. Understanding these rules and using the power of the right enterprise structure allows you to raise and deploy capital for Bitcoin investment far more effectively, far faster than an individual ever could.
Which leads directly into Way 14, capitalization, the actual process.
This is the active process. Raise and reinvest capital relentlessly, as fast as you can, as much as you can. Velocity is key. It compounds wealth faster. He gives examples. You incorporate, you sell equity, you buy Bitcoin, the value appreciates. That increased value allows you to borrow money. You use the borrowed money to buy more Bitcoin, value increases further. You use operational cash flow, you use treasury assets basically. Every available source of capital is directed towards acquiring Bitcoin. He uses the house example again here. If you have a paid-off house, instead of just letting that capital sit there doing nothing, you might borrow against it at maybe 6% to invest in something with 20–80% potential returns. You capture that spread and rapidly compound your wealth rather than just having a static, debt-free asset. He calls it a race to capitalize on Bitcoin because, in his view, he who has the most Bitcoin at the end of the game wins.
Framing it as a race definitely highlights the urgency he feels. Okay, way 15 is communication.
This underpins everything else, really. You can have the best structure and strategy, but if people don't trust you, you can't raise capital. It just won't happen. Creditors won't lend, investors won't buy equity, employees won't work for you, vendors won't extend terms. Earning that trust requires candor, transparency, and consistently repeating your message across digital channels. He argues you don't need a complex or fancy story, just a straightforward, transparent strategy that people can understand. When people understand and believe in what you're doing, they support you, providing the capital and energy needed for success.
Way 16 is commitment. What does that entail specifically? Avoiding distractions.
Exactly. It's about avoiding dilution and distraction from the core mission. He points to the many people who perhaps discovered Bitcoin early but got sidetracked. Maybe they tried building alternative tokens, yo-yo coin was his example, or they got caught up in short-term trading juggling Bitcoin, or they spent their energy writing books about their journey instead of focusing on acquiring more Bitcoin. Or perhaps they built businesses whose corporate boards eventually forced them to sell their Bitcoin holdings.
So staying focused on the idea, the main prize.
Exactly. Be committed to the core idea of Bitcoin itself. Don't get pulled into unproductive arguments with internet trolls, which is easy to do. Don't chase every good idea that comes along when you believe you already possess the world's greatest idea in Bitcoin. Avoid lost causes and trying to fix systemic issues far beyond your immediate influence. His example was, unless you can stop the war yourself. Don't become complacent or take success for granted. He really stresses avoiding dilutive distractions that pull your precious time, capital, and energy away from the main path of Bitcoin capitalization.
Right. Then way 17 is delivery.
This is the practical execution side. You need consistent, precise, and reliable execution. Day in, day out. Be relentless in following your strategy. Don't take anything for granted, your customers, the security of your assets, your current level of success. Maintain laser-like focus. He contrasts this with trying to manage too many complex, unrelated things at once, like trying to juggle 10 razor blades or scattering your attention across countless trivial topics online, like opining on 50 things on Twitter X. The market, he says, rewards that intense laser-like focus on execution.
Okay, but then way 18 is adaptation, which feels slightly different from the intense focus he just described. How does that fit?
It acknowledges the reality of long timelines. Over decades, he says, every bank, every company, everything will eventually face challenges or fail, including, eventually, ourselves. A wise approach, he argues, is being prepared to abandon your baggage and change your path when circumstances fundamentally shift and require it. Have a plan, definitely, but constantly monitor the environment and your progress against it. Don't be ashamed to switch course if the data or the environment dictates it's no longer the right path. This also includes personal readiness, keeping your affairs in order, having a succession plan, be ready to adapt when the inevitable changes arrive. It's about long-term survival.
Shifting focus now toward the end game, the long-term impact and legacy. Way 19 is evolution.
Right. Build and grow based on your core strengths and the strong assets you've accumulated, primarily Bitcoin in this context. The goal is graceful evolution, not radical mutation. Avoid jumping completely outside your area of expertise or comfort zone into totally new, unrelated ventures. He says that increases execution risk by 100-fold. Instead, leverage your existing skills, your network, and your growing Bitcoin position to evolve naturally and build upon your success.
Okay, and way 20 is advocacy.
Yeah. Once you've found this path and achieved some success, inspire others to walk it too. Become an evangelist for economic freedom, as he puts it. His perspective is that the more individuals, corporations, institutions, and even governments who embrace Bitcoin, the better it is for everyone. It strengthens the network, it validates the idea, and ultimately benefits you, them, Bitcoin itself, and he argues, the human race. Your success becomes kind of linked to broader adoption.
And the final way 21, is generosity.
When you are successful, share that happiness, security, and hope with others. This means being generous with those less fortunate, your employees, family, friends, customers, investors, your broader community. Having found this path yourself, he believes you should spread that good karma. It creates a positive cycle benefiting you, your business, the Bitcoin ecosystem, and the world. People are inspired by generosity and are more likely to follow your lead, he suggests. So when you look at these 21 points together, from Saylor's perspective, they really form a remarkably comprehensive framework. It starts with a core belief about Bitcoin, combines it with courage and foundational relationships, then leverages modern tools like AI and powerful corporate structures to acquire capital rapidly, demands intense focus and execution, and culminates in a vision of sharing that success through advocacy and generosity. It's a complete system for wealth building in this specific era, centered around what he sees as the greatest opportunity.
It really connects the dots from that initial conviction all the way through to long-term legacy. It's quite a journey. And it ends with a thought-provoking idea, which Saylor attributes to Satoshi Nakamoto himself and perhaps the ultimate distillation of the whole strategy. It might make sense to get some in case it catches on.
Wise words indeed. A simple starting point.
This has been quite a deep dive into Michael Saylor's 21 Ways to Wealth. Thank you for joining us today.
Yeah, we hope it offered some valuable insights, maybe some things to think about for your own journey.
Absolutely. If you found this deep dive valuable, please take just a moment to follow, like, and share it. It really helps. And you can follow What Bitcoin Taught Me across social media on Twitter X, Nostr, Bluesky, Threads, Instagram, Facebook, and LinkedIn. Thanks for listening.